In today's video, I'm going to be looking at a pretty topical issue that affects a lot of people at the moment. I've been getting a good few questions on this, and that is if you receive a loan from a parent or an uncle or an aunt or a brother, sister, or even a grandparent to enable you to buy your first property, then what do you need to be aware of from a revenue perspective? And that is what I'm going to be going over in this video. The housing crisis in Ireland at the moment is making it very difficult for people to get on the property ladder. There is a huge shortage of supply, and the country is really seeing the lasting effects of the 2008 financial crash. As well as a shortage of supply in the market, the cost of building a new house has also skyrocketed, with the price of materials being hugely affected by pandemic-related supply chain issues. The latest CSO data that was available on residential property inflation was up to October 2021, and this data was saying that over the 12 months to October 2021, the rate of inflation on residential property was 13.5%. It is no wonder that a lot of people have had to turn to the bank of mum and dad to try and help them get over the line and secure their dream home, as the prices of these houses are constantly kind of running away from them. First time buyers are not only being squeezed out because of inflation, but also because of very strict loan to income rules. The current loan to income limits restrict the amount that you can borrow to 3.5 times your gross income. So for a couple that both earn an average salary of €40,000 per annum, that will leave them at a maximum borrowing amount of €280,000. And then depending on what part of the country you are in, that will either get you a decent home or will barely get you an apartment in some places. The deposit requirements will also vary depending on whether it is your first home, or you've owned a home before, or you plan on buying a buy-to-let property. For first-time buyers, you only need a deposit of 10%. If you were a second-time buyer, then you're going to need a deposit of 20%. And if you were buying a buy-to-let property, you were going to need a deposit of 30%. There are government initiatives in the pipeline, such as the Shared Equity Scheme, where the government will pay up to 30% of the purchase price of your property in return for a stake in that property, which you can repay over time or whenever the property is sold or whenever you die. But these schemes may be too little too late for people who are currently trying to get into the market. The usual arrangement of a loan between a parent and a child will have an interest rate of 0% and no specific period of repayment, and the parent is legally entitled to charge 0% interest on that loan. But from a tax perspective, the notional amount of interest that you didn't have to pay on that loan you got from your parents, that is viewed as a gift. And a tax rate of 33% capital acquisitions tax is charged on gifts in Ireland. But there are lots of tax-free thresholds that you can avail of that will really minimise this tax, and luckily for us they are pretty generous. You will only have to pay tax on any amounts above these thresholds, and I will go through those in a moment. But what interest rate should you be using to try and calculate how much of a gift you've actually received by not paying any interest? Well, the interest rate that is commonly used to calculate this amount would be the interest that the parent has forgone by not leaving this money in their own deposit account. Luckily enough, these deposit rates are pretty much zero at the moment. The deposit rates for banks such as Allied Irish Bank and Bank of Ireland at the moment are at record lows between 0.1 and 0.25%. So now a little bit on how much you are entitled to as a tax-free amount as a gift from your parents or your grandparents or your uncles or aunts or brothers or sisters. So a child is entitled to a lifetime tax-free threshold of $335,000 from their parents. So the category A group relates to gifts from parents, and that is the highest at $335,000. If we then move to category B, that would be the likes of your uncles or aunts or grandparents or brothers and sisters. Your lifetime entitlement from that category is $32,500. There is another exemption that you can avail of, and that is the small gift exemption, and that adds up to €3,000, and you can get this gift of €3,000 from any person in any calendar year completely tax-free. So now let's look at an example. A parent lends €100,000 to their child to help them purchase their property, and they charge 0% of interest on this loan. The amount of interest that they have only forgone is €250. So that is $100,000 at an interest rate of 0.25%, which is the amount that you can get in an AIB deposit account at the moment. This annual interest amount is well below the small gift threshold of €3,000 per year, so therefore the child accrues no tax liability whatsoever, and their lifetime gift threshold remains intact at €335,000 because they don't have to dip into it because it's under the small gift exemption. It is important to note though, from the parent's perspective, that they will need to include this €250 as a taxable benefit in their annual tax returns. Times at the moment are pretty unusual with interest rates so low. Historically though, we would have seen much higher rates a decade or two ago, possibly as high as around 4%. So in that situation, your calculation would be a little bit different on the same example that I did above. That loan in the example would have been accruing €4,000 in interest annually from the perspective of the value of the gift from the parent to the child. Central banks have been doing a lot of talking about raising interest rates over the next couple of years. They probably won't be going as high as 4% anytime soon, but even marginal increases in the interest rates will mean that you are receiving much more of a gift by getting a loan from your parent at a 0% interest rate. At the moment, with interest rates so low, people don't really have to worry about this at all. So that's pretty much it for my video today on this topic. I hope I kind of cleared up any questions that people may have had on it. If anybody has any more they want to ask me, please let me know in the comments and I will try and address them. Thanks very much for watching. I hope you enjoyed the video, and if you did, please make sure to subscribe so you can keep up to date with my latest videos.